So welcome back guys. So in the previous session what did we learn? We saw all the sales variances, sales price variance, sales. So we learned all the sales variances in the previous class. So what are the variances which we saw in the previous class about the sales? First one was the sales price variance. So sales variance can be taken on price level also, profit level also, that we had saw yesterday. So first one is the sales price value variance, that was divided into two types, sales price and the sales volume. Again, sales volume was divided into sales mix and sales quantity. Quantity is nothing but yield in case of material and labor. So sales variances are same as the material and labor, but we have to see that if it is exceeding budget, it will be favorable because this is income and not expense, whereas material, labor, overhead are expenses, but sales is an income, so there will be an inverse relationship. If the actual is exceeding the budget, it will be known as favorable. If the actual is less than the budget, it will be known as adverse. So these are the variances which we saw yesterday. We had completed all the problems also on this. So now we will be completing the fixed overhead variance. So what do you mean by fixed overhead? So what do you mean by the term fixed overhead? So fixed overhead. So fixed overhead are those variances, those overheads which will be fixed in total, vary per unit. So what is this fixed overhead means? So in order to suppose I'm planning to start these classes online, I have to make setups, no? I have to buy a camera, I have to buy systems, I have to buy the notepads to write, monitors, CPUs and all those things. So these are my fixed costs. Even if a student purchase the class or not, I have to invest this amount. This is known as fixed overhead. So if you take offline situation, we have to pay rent, we have to place the furnitures, and we have to have a board and all those things, all those setups. Even if student comes or does not come, we have to invest on those things. If suppose the capacity is 50 and 50 admissions have taken place, if any extra one comes, I have to take another room for them or expand the room. But the thing is, we have to invest again. That's the reason fixed overhead will be fixed in total. If suppose one student comes or 50 students come, the total will be same, but per unit will be different. So if suppose there are 10, I have invested 1 lakh and there are 10 students, the cost per student would be 10. I have to recover 10,000 from the student towards the fixed overhead. But if the total is 50, then it will be 2,000. I have to recover only 2,000 per student. That's the reason. So fixed overhead will be fixed in total, vary per unit. So now we will see what are the variances in the fixed overhead. What variances will come in fixed overhead? So first one is the fixed overhead variance. So this is the gross level. Actual standard minus actual, that is divided into expenditure and the volume. Volume is based on number of units, expenditure is based on the price. Again, the volume is further divided into capacity and efficiency, like the mix and yield in case of material and labor. Next, capacity is also further divided into calendar and revised capacity. So we will be seeing all the variances one by one. So we will see first of all, we will see the first variance, which is the fixed overhead cost variance, which is the gross level. So what is this variance? This variance is that it is the difference between the standard fixed variance allowed for actual production and the actual fixed overhead variance. So it is the standard variance for actual production. We can't compare 2000 with 1000. 1000 can be compared. That's the reason. So standard overhead for actual production and the actual expenses. or the actual overhead. So we will see the first question. Illustration 19. Details of the fixed overhead production hours and production for the period are budgeted hours is 10,000. So we have budgeted 10,000 hours. The fixed overhead rate per hour is 10. So 10,000 into 10, 1 lakh is the fixed overhead, budgeted overhead. That this much will be incurred. Standard hours per unit is 5. So per unit it will take 5 hours. Next we have actual production 1920 and the actual fixed overhead 94,000. So in this actually we have incurred 94,000, but the number of units is 1920. We have, in this we will use the term recovered. So recovered is nothing but, see, I'll tell you. So per unit it is taking 5 hours. So budgeted is 10,000 hours. Per hour it is taking 10, which means when 1 unit is produced, I will recover 50. How did I get it? Per hour rate is 10. Per hour rate is 10. For 1 unit they are taking 5 hours, which means I will be recovering 50 if 1 unit is produced. If 1 unit is produced, I will be recovering 50 rupees. That is 10 into 5. Okay. Now I have produced 1920 units. What will be my recovery? 1920 into 50. Let me just calculate. 1920 into 50. It is 96,000. So what they are telling here is that, so the concept of fixed overhead is that we will be recovering fixed overhead once 1 unit is produced. I told no. See, in the setup, as in the offline classroom, I have invested 1 lakh. So if suppose I have invested 1 lakh, so if one student comes, the capacity is 50. Assume the capacity is 50. So 1 lakh by 50, 2,000. If one student comes, I'll be recovering 2,000. If the second student comes, I'll be recovering 4. If next, 6. If next, 8. So it goes on like this at an incremental rate of 2,000 each. So in this particular question, assume the same situation. So for one unit, I'll be recovering 50. 10 per hour into 5 hours per unit. So I'll be recovering 50. 1 unit I'll be recovering 50. Now they have, my capacity is 2,000. How did I get it? So budgeted is 10,000. No, per unit it is taking 5. So my budget is 2,000 units. I have the capacity of 2,000. If the number of units is above 2,000, I'll be in a profitable situation. Now we'll see. Now actual I have incurred only 94, not 1 lakh. But how much did I recover? That I have to see. No. How much I recovered is that I produced 1920 units, but for 1 unit I will be recovering 50 rupees. So for 1920 I will be recovering 96,000. I recovered 96, but the actual was 94. I am in a favorable situation. So if you go see this problem, see the budgeted units is 2000, which is the 10,000 divided by 5. 1 unit 5 hours. So in 10,000 hours I will be producing 2,000 units. Budgeted expenditure is 1 lakh. Is nothing but number of hours into rate per hour. They have got 1 lakh. So budgeted rate is 50 per unit. You can do like this also. You can do like 10 into 50 is 50 rupees. Both are same. Now I will be recovering 50 on 1920 units. 1920 I will be recovering 50 rupees per unit. So my total is 96 minus the actual is 94,000. I will be getting 2,000 favorable. If suppose it is 92, it is adverse. Next. So I hope you understood this. It is nothing but recovered minus actual. Recovered, how will recover? On unit basis. Next we have fixed overhead expenditure. It is same like price variance. So it is the difference between budgeted fixed overhead and the actual overhead incurred. So this is actually simple. Budgeted will be given in question, actual will be given in question, directly deduct that. So I'll see the question now. See, the solution is very much simple for this. What is the formula for expenditure? It is budgeted minus actual. Here we don't have the concept of the recovered and all. So budgeted minus actual. So what is my budgeted here? 10,000 hours into 10. I will be getting 1 lakh. Minus what is my actual? 94,000. 6,000 paper hours. So this one is very easy. So the formula for expenditure is that budgeted minus actual. Budgeted will be given in question, actual will be given in question, that directly deduct it. Now next we will see. So understanding my point now, this is simple actually. Expenditure is nothing but budgeted. We will be having budget, that in this question we have 1 lakh, directly deduct the actual overhead. Next we will see what are the causes for this expenditure variance or budget variance. So as at the times of expenditure involved are many, the causes may be numerous, but broadly speaking the expenditure variance may be due to the variation in the price and quantity of both. Each item is analyzed and corrective action is taken depending upon the causes. It may be to the following reasons. So these are the reasons for which we will be getting expenditure variance. What are they? First one is seasonal condition. It will be, there are situations that there may be seasonal demand, we will be recovering more or less. Next, improper use of available resources, we will be not using the available resources in an effective manner. Next, efficient use of tools and management, we would be using the tools and equipment in an efficient manner. Next, improperly set standards, so standard will not be set taking into the current condition or the current market situation, the equipment capacity and all those things. Rise in the price due to inflation. Inflation factor is one more thing which will be not taken into standard because it will be prepared well in advance, but inflation may change in the market up and down. It may go up or down like the stock markets. Next, change in the method of operation. So we may change the operational method only. We will be shifting from process A to process B, all those things. Next, so we are completed with 2 problems. Next we will go to the third one, which is the volume variance. Volume is same like usage variance. It will be depending number of the, what is the formula there? It was standard quantity minus actual quantity into standard price. Same concept will be applying here. See, volume variance is the difference between budgeted fixed overhead and the standard fixed overhead recovered on actual production. So see, budgeted outputs minus actual outputs into standard price, same as usage variance or labor efficiency variance. So these are the causes: power failure, machine breakdown, waiting for tools, idle capacity, variance in customer demand and order booked, labor strikes or lockouts. So there may be situations of lockouts, or employee will be having a strike going on, working overtime due to rush hours, and defective scheduling and running of production. So now we will see this question number 21, which is actually easy. So what are my budgeted units? So the formula is this: standard quantity minus actual quantity into standard price. So I have my standard price, which is 50 now 10 hours. For 1 unit 5 hours, but for 1 hour 10 rupees. So 10 into 5, 50. What is my standard quantity? This, for 1 unit I am taking 5 hours and I have 10,000. So my capacity would be 2,000, no? Minus 1,920 I have produced. So the answer would be 4,000 adverse. Why adverse? Because I am under recovering. I should have recovered on 9,000. I should have produced 2,000, but actually I have produced only 1,920. That's the reason I have adverse variance. So I have not recovered the 100% of the overhead. By this we have completed 3 illustrations. Next we'll go to the efficiency variance. So fixed overhead efficiency variance. What is my efficiency? Whether the actual is matching the standard. That's all. That's the main funda here. It is that portion of volume variance. So it is a part of volume. Volume will be divided into 2 types. Now one is the efficiency, which shows the lower or higher output arising from the efficiency or inefficiency of the workers. If it is efficiency, it will be higher output. If it is inefficiency, it will be lower in output. So what is the formula? Standard quantity minus actual quantity into standard fixed price. Now coming to illustration number 23. ABC company records reveal the following data in the month of June. You are required to calculate fixed overhead efficiency variance for the month of June. So they have given budgeted output is 1000 units, actual output is 700 units. Budgeted fixed overhead is 4000, actual is 3500. Can I compare this? No, because budget is for 1000, actual is for 700. Standard hours is 2. Standard hours per unit is 2. Hours available is 500. Actually we have worked for 450. What have they asked? Calculation of fixed overhead efficiency variance. As I told you, here we will be comparing standard quantity with the actual quantity. So actually how much hours we have worked? We have worked 450 hours. But how much should I have worked? Actually worked. Its actual output is 700. Okay, the hours is 2 per unit, so the total will be 1400. But I have worked only for 450. I have a variance of 950, so I worked less. So because of it, I will be recovering less. No, see, if it is material, it would be favorable. Now it is fixed overhead. When you work 1400 only, you will be recovering more. Here you have worked only for 450. Okay, actually you should have worked for 1400. So you have a variance of 950, which is adverse. Now we will be multiplying it with the standard rate. What is my standard rate? So budgeted fixed overhead is 4000. But is it here units or hours? It is hours. So I have to convert the units into hours. So budgeted is 1000 into 2 per hour. It will be 2. So 950 into 2 will be getting 1900 adverse. So I will tell once again this question. So they have asked the efficiency variance. Efficiency is nothing but the standard quantity and the actual quantity. So I have asked you to produce this, but you have produced less. If you are purchasing more and above the standard quantity, I am happy. You are having an efficiency more than 100%. But now in this question, we will see what is the efficiency. So I asked to actually the number of units was 700 was produced. The standard hours per unit is 2 hours. You should have worked for 1400 hours. What did you actually work? 450. So if it is labor, it is favorable because I asked you to work for 1400 hours. You have actually completed that work in 450. I am happy. I'll see the quality later, but I am happy as of now because you have served me 950 hours. But when it comes to fixed overhead, you have to check whether. So fixed overhead will be observed when you work at the 100% capacity. If you worked for 1400, I would have said that you have recovered all the fixed overhead. Now you have worked only for 450. I have not recovered full, no. So that's the reason there will be adverse variance of 1900, which is the difference between 1400 and 450. I got 950 adverse. On that, the rate. How did I calculate the rate? The rate was calculated like this. So budgeted overhead is 4000, but they have given units, but this is hours. So units I am converting it to hours, that which is nothing but 1000 into 2000. So by this we have completed illustration number 23 also. So these are the causes. What are the causes? Poor working condition, poor supervision, poor scheduling of production processes, frequent power failures, and improperly set standards. So improperly set standards is a common point for all variances, because standard have to be set taking into consideration of all the factors. There may be situations that we might not take all the conditions. There may be chances. That's the reason. So by this we completed 23 also. We have got the answer. Next we have calendar variance. So what is this calendar variance? Calendar variance is a part of capacity variance, which is due to the difference between the actual number of working hours and the budgeted working hours. So calendar, when you remember calendar, it is nothing but days. So it is the difference between actual working hours and the budgeted working hours. So we will see the problem, then we will get the answer. So the company has a normal capacity of 100 machines working at 8 hours per day for 25 hours. So what will be my budgeted hours? So it will be 100 into 25 into 8. 25 into 8 is 2200 into 20,000. So this is my hours. So I have the normal capacity of 20,000 hours. The budgeted fixed overhead is 1,50,000. So I can get the budgeted overhead rate now. Here I will be getting 7.5. The standard time required to manufacture 1 unit of product is 4 hours. So standard time is 4. Okay, in a particular month, the company worked for 24 days at 750 machine hours per day. So they have worked for actually 24 into 750. They worked for 18,000 hours. Okay, and yeah, they have worked for 18,000 hours and produced 4,500 units of the product. The actual fixed overhead incurred were 1,45,000. What have they asked? Calendar variance. Now, next we have calendar variances. What is the formula? Revised budget output minus budget output into standard fixed price. No, we will go like this. So we have calculated our budget rate. So what is the actual? So this budget is for 20,000 hours and 25 days, but they have worked for only 24 days. I have to convert from 25 to 24. What I will do? I will just multiply. I will just change only the days. I will change it from 25 to 24. So I will be getting 1900 hours. That I will multiply into budgeted rate. What is my budgeted rate? 7.5. I will be getting 1,44,000. So I'll tell you. So budgeted, I have told that I'll be working for 25 days, but 8 hours into what is that 100? 100 days. 100 machines. 100 machines, 8 hours per day, 25 days a month. So this I'll be getting 20,000. The budgeted overhead is 1,50,000. This I'll divide by 20,000. So I'll be getting budgeted overhead rate. but actually they have worked for only 24 days. So this I have to calculate budget for 24 days into 100. So this I'll be getting 19,200, but they have actually worked for 18,000. So I would have recovered less, no? Now the formula is just a second. So the budgeted overhead is 1,50,000, but you have recovered only 1,44,000. How is it? So 1,44,000, how did I get? $19,200 into 7.5 minus 1,50,000. So 19,200 into 7.5, how much is it? 19,200 into 7.5 is 1,44,000 minus 1,50,000 to 6,000 adverse. By this we have completed the calendar variance. Now we will be going to D. So in this particular overhead variance we have done with 25. So I am only left with 24. 23 is done. 24 and 22 should be done. So which will be covered later. Now you will see some of the questions. We have some full-fledged questions on material, labor and all those things which will be covered now. So we will be completing all those, every illustrations, and then we will see what are the remaining parts now. So now we have completed all sales related problems. Now we have interpretation of variances and inferences drawn. So before that, yes, illustration number 36. So it is a full-fledged problem. We will be calculating every variances in this, like the material, labor and overhead, variable overhead. So please go through the question now. So now we will solve the question number 36. So this is a full-fledged question. In this we will be having every variances. So these are the questions which will be coming in examinations and all. So we'll see. So they're telling that the management of your company have provided with the following data. The company manufactures a single product for which the standard variable cost. So this is the standard variable cost. They're telling that per unit, it is per unit. So direct material 81 kgs it is requiring at 7, so 567. So direct labor 97 at 4 it is 388. Variable overhead 97 at 3 it is 291. So it should be 291 and the total would be 1246. Please make the correction here. 567 plus 388 plus 291. So 1246. So it should not come here. So 291. During February, now we have the actual data. Please write here actual data. 530 units were produced. Okay. And cost incurred were as follows. Direct material they are using 42,845 purchased and used. So there is no closing stock here. It's 3,08,484. Next we have labor. So here we can find per unit, no, per kg. So 308,484 divided by 42,845. So the per kg is here 7.2. So when you are having question like this, no, it is better to calculate per unit because they might ask question on price variance. That's the reason. Next direct labor. So see here how much direct laborers you have worked, that much you will use variable. So variable overhead will be occurred on the basis of direct laborer. See, it's like this. If I am doing the class now, then only I will be consuming electricity. If not, I will be not consuming electricity. So direct laborers is me teaching. Electricity is the variable overhead or the factory overhead. So this is directly related to my teaching. That's the direct laborer. That's the reason how much you work, how much that much electricity will be consumed. That's the reason variable overhead and the direct laborers hours will be same. Next I have direct labor 51,380 work for, and the cost is 2,382,000. Please calculate per unit here also. I got 3.9. Next variable overhead cost is 1,56,709. As I told you, should be taking 51,380 for this also. 51,380. So 156,709 divided by 51,380. I am getting 3.05. So I have calculated all the per unit also. Next, you are a newly appointed cost accountant and the management is asking you to make the necessary calculation showing the variances, if any, in respect of material, labor and overhead. Variable overhead. So in this we don't have fixed. So we have to calculate all the variances. But in this material does not have mixed and yield because it is using only single material. If it is two or more, then we have to calculate mixed and yield also. Same in case of labor. Here they are using only one type of labor. If it is using more than one type of labor, maybe skilled or semi-skilled, then also we will be having mixed and efficiency variances. So now we will start with the problem. First I will make a note of everything. Standard. Illustration number 36. So actual data I cannot change. Standard data I have to make in line with the actual. So what is that? I have material, I have labor, I have variable work. So what was my machine material? 42,845 7.2. 42,845 7.2. If I multiply, what is it? 42,845 into 7.2, no? 308,484. Next, labor 51,380, I guess. Here also it will be 51,380. What is the rate? 3.9 and 3.05. I'll just multiply 51,380 into 3.9. It's 2,382,000. There is no rocket science here. I'm just multiplying and dividing. That's it. Next, 51,380 into 3.05. 156,709. This is for 530 units. Now again I have to calculate for standard. No, standard was for actually 1 unit, so that I have to convert into so standard was a one unit, that I have to convert into 530 units. Just multiply by 530. That's it. So they are using 81 into 530. 42,930. But be careful here, I have to take it kg, 7 per kg. So 3,510,000. 3,510,000. Next I have labor. What is the labor cost? 97 hours. 530 into 97. So it is 51,410 at 4. 51,410 into 4. So I'm getting 205. 97 into 530. No, 51,410 into 4. 205,640. 205,640. So if labor is 5410, variable also will be 5410. So but it is at 3. 51,410 into 3. 154,230. So yes, now I have prepared the chart. Now only is the labor work, calculating the cost, calculating the price, calculating the usage in case of material, and all those with respect to labor and variable overhead. So we will start with now first one, material variance. All the material variances. So the main thing is preparing this chart. That's the reason. So only point was here variable overhead. Variable overhead should be same. The variable overhead incurred should be same based on the direct labor hours, because only if there is labor hour we will be having variable cost. If not, we will be not having. Fixed cost will be there, but variable overhead will be started once there is a labor hours worked. If not, no. Next, I will start with the cost variance. So cost is nothing but totals. No, standard is 3,510,000 minus 308,484. 3,510,000 minus 308,484. 7,974 adverse. So simple, no? I have calculated the standard cost. I have the actual data. Just comparison between these two. This will be divided into two types. In exam, please don't write like this. No, you have to go by points only. So I'll go by like those things. Price variance. So got my point, no? Actual data is already given. As I am telling from the starting of standard costing, actual cannot be changed in any situation. Actual is actual, you can't do anything for that. But standard you can change. In this particular question, see, they have given standard for per unit, which is 1 unit. Their cost is this much, but actually they have produced 530. No, otherwise you can find this cost in another way also. So direct material 567 is per unit into 530. You will get the same answer. Direct material 388 into 530. You will get the same answer. There will be no much difference. So next we have variable 291 into 530. See, you have got 154, 230. Everything will be same. Any method you go, it will be same. But this, the calculation of this is a, there is a particular reason, because we have to find, not only the cost variance, we have to find price, we have to find usage and all those things. So that's the reason I went by this method. So how did I get this 42,930? Just multiply per unit hours into 530, that's all. Per unit, how much is their material they are using? 81 into 530, that's it, you get 42,930. Next I have 97 into 530, 51,410. So please make a note of it. No, this one, how did I'll write only for material, 81 into 530. Next 97 into 530. Again this will also be 97 into 530. Please make a note of this chart. So next we will start with the price variance, or you can write this by the side of the study material also. I'll write it in a separate note also, no issues. Next you can try price and usage variance also for material, since all the data are in this. So you have all the data for price, you have all the data for usage, for labor, variable overhead, you have every information in this particular chart. Now you can try all the variances, and now I will be doing. Please take 5 minutes of time, you complete everything, then you can cross check the answers while I am doing this. So now I'll be doing the problems. Please check your answers now. Price variance, what is the formula? Standard price minus actual price into actual quantity. So what is my standard price? 7, actual price 7.2 into 42,845. So minus 0.2 into 42,845. The answer should be 42,845 into 0.2, 8569 adverse. So please check your answers. The price variance should be 8569 adverse. Next I will go to usage. What is my formula? Standard quantity minus actual quantity into standard price. $42,930 minus 42,845 into 7. Just give me a second. $42,930 minus 42,845 into 7. Please check your answers once again. I hope you have attempted at least 42,930 minus 42,845, 85 into 7, 595. Is it correct? Please check your answers. 595 favorable. So if 8569 is adverse minus 595 is favorable. So 7974. Yes, it's matching. So by this we complete the material variances. Please check your answers once again. Next we will be jumping to the direct labor variance. So what is my labor cost? Standard cost minus actual cost. So standard cost is 205,640 minus 2,03,882. The actual cost of labor, which is 5,258 favorable. Which means what is that? How did we get this favorable? We have to analyze those things also. I told them to complete the work by 51,410 hours, but they are completed before that 30 hours. I told them to pay 4, but they were actually paying 3.9. That's the reason we are getting a favorable variance. Whereas in material, I told them to use 42,930, but they have used less. But in this situation, they are getting the price of the material is more. That's the reason we are getting adverse. So while doing the problems, please try to analyze also what is the reason for the variance. If you write the reason for the variance, it will be good. Next I'll go with labor cost, labor price variance. So what is the formula? Standard rate minus actual rate into actual quantity. What is my standard rate? 4 minus 3.9. 4 minus 3.9 into 51,400. It's 5138 favorable. Next I'll go to labor efficiency variance. So once you do the above chart, then everything will be easy. So I just copied from above. I'll see what is the standard hours now. 51 410. 51 420 minus. So 120 favorable. So 5138 plus 120. So 5258. So it's matching. So by this we complete the labor also. So please, if you are done, please check with your answer. If you are not done, please copy it. So this was a simple problem, but it was extensive because we have to calculate all the variances for material, labor and overhead. Next we will be calculating for variable overhead. So now we'll start with variable overhead variance. So in this we have bigger problems which will take what one and a half hour. So that I'll plan to do it in a separate video. See, if you see now question number 34. See question number 35. I will do this concept and we'll finish it off. See, if you see question number 35. See, it starts at page 306. If you can ignore 306, 7, 9, 10. So 10. So the answer is only 4 page. So I'll make one thing. So if you do that particular question, everything will be covered. So what I'll plan to do is that I'll make one single video. I'll be doing all that in one. I'll do that question in one single video. So if you want to refer during your exam times, you can directly refer that video. So I'll name it as a separate question, that illustration 34, and you can see whenever you want. So coming back, we'll start with the variable overhead variance. Variable overhead variance. So first one we have cost variance, which is nothing but standard minus actual. This everybody should do. They should not make any mistake in this. So it's 154 230 minus 156 709. 154 230 minus 156 709. I think it's adverse. How much adverse? 154 230 minus 156 709. It's 2479 adverse. Okay. Next, what is the next one? Expenditure. Expenditure is same like price, no? Standard price minus actual price into actual quantity. What is my standard price? 3 minus 3.05 3 minus 3.05, which is 0.5 negative into 51,380. 3 minus 3.05 into 51,380. Oh, 3 minus 3.05 into 51,380. Yeah, it's 2569 adverse. Next I have efficiency. Efficiency, I will take hours now. So this I copied to reduce my work. Only I will take from the standard hours. 51,410. 51,410. 51,410 minus 51,380, which is 30, I guess, into 3 is 90. 90 favorable. So if I reduce 2569 minus 90, should be getting 2479. Yes, this problem is done. So by this we have completed this problem. If suppose we are getting this question for more marks, I suggest you to write the definition of that particular variance in one liner. So what is variable cost variance? So it is the standard cost minus the actual standard variable cost minus the actual variable cost. What is the material cost variance? What is the material price, the usage, the labor cost, the labor price, or the labor efficiency? You can write in one liner, so it will be a plus weightage for it. So when I used to do when I got my problem of the standard costing in exam, I wrote like this, so I got full marks on this question. So that's the reason I suggest you to write a one liner if time permits. So you have to complete the exam within the time. So plan in such a way that you cover everything. If suppose you don't know any answer, if suppose I pray that you should know every answer. If suppose chance you don't know any answer, instead of wasting time for that, you write this answer in a good manner, like good presentation. Losing that question marks you might gain here, you might gain out of 4 in this particular question if you are thorough with the concept. So that's the reason write one liners about the variances. So we'll see what was the institute answer now. So they have calculated total variance. Even we have got the same thing. See, this is an adverse variance because actual cost exceeds the standard. Hence, actual profit will be less than the budget. So this is what I was telling. Please write one liners. So this can be analyzed into price and quantity. See, reveals that how much direct material total variance was cost by paying a different price. This adverse variance indicates the expenditure is more than the standard because higher standard price was paid for each kg. See, they have given all one-liners. The answers are matching. Then you can give a note that this is a favorable variance since the actual cost is less than the standard. This variance can now be analyzed into price and quantity. So they are taking for labor. See, labor, you can write the formula. The actual hours paid, actual hours paid. So they are telling that actual hours standard rate minus actual rate. If you actual hours standard rate, actual hours standard actual rate. So this is the formula. So you can write all one-liners. So you can give the definition also. So here they have given the definition. The labor variable overhead efficiency variance reveals how much the variable overhead total variance was caused by using the different number of hours of labor compared to the standard allowance for the production achieved. It is very similar to the calculation of labor efficiency variance. By this we complete illustration number 36. So illustration number 36 was a comprehensive illustration. So the key takeaways of that question is anyhow we will be calculating all the variance. Over and above that, if please write one-liners for the variances you have got the answers. Now we will start with illustration number 37. So what is this illustration? It is a small one based on only material. The standard cost card shows the following details to the material needed to produce 1 kg of product. So they are telling for 1 kg the quantity is material required is 3. The cost is 2.5 per kg. Okay, this is the standard. So 1 kg they will be requiring 3 kg. But see here, production is 1000 kg. For 1 kg 3 kg is required. For 1000 how much? 3000 kg will be required. But you should have purchased at 3. They have purchased at 3 only. So there will be no price variance actually. How much? Sorry, they have purchased at 2.5. Sorry, they have purchased at 2.5, but we have actually paid 3. So by that we can calculate no variance. Simple. Thousand was the input. So how much did they use actually? 3500 kgs at 3. So they should have used 300, no? 3000 into 2.5 they should have paid. So 3000 into 2.5 how much? 7500. Now we'll be calculating the variance. What is the labor cost variance? What is the labor cost variance? What is the what is the material cost variance here? $3,000 into 2.5, which is 7,500, minus 3,500 into 3, which is 10,500. I will be getting 3,000 adverse. So this was a basic problem. Next, price. This will be cost. So price 2.5 minus. So I am not writing the formula, assuming that you know the formula. So when you are writing in examination, please definitely write the formula. So please check whether I am doing right. Now you try, because I have done a wrong here, that's the reason. So I had taken total only. It was 3500. So it will be 1750 adverse. Next I have usage now. Usage is 3000 minus 3500 into what was my price? 2.5. So by this we complete illustration number 37. 37 is done. Control ratio I'll see next. At the end we'll solve this. 36, 37. Next we'll see 38. So 38 is also easy one. A manufacturing concern which was, so I hope you copied this, no? This was a simple one, that's the reason I am going fast. Anyhow, we know the concept. So see, this is very important. You can take it as a B category. A manufacturing concern has adopted standard costing and furnishes the following. Standard material 70 kg of finished goods, 100 kg of input. So if you are putting 100 kg, you will be getting only 70. So the standard price is 1 per kg. But the actual output is 2 lakh ton. What should be the standard now? So I am putting 100 and getting 70. But I got 2 lakh ton output. How much is my input? So 2 lakh ton into 100 by 70. How much is it? 2 lakh 10 divided by 0.7 is 3 lakh kgs. So 3 lakh kg should have been used. But how much did they use? 2 lakh 80. I am happy. And for that they have paid only 2 lakh 52. Okay. So the standard price was 1 rupee, but they have used 0.9. So I'll be getting favorable variance. So what are they? Usage, price and cost. Simple question again. Three lakh kg I have told them, but they actually used 2 lakh at 0.9. So what is my variances? Please try it out. Variances. So definitely I'll be getting 48 favorable now, because so cost would be 3 lakh minus 2 lakh 52. 3 is 48 favorable. Next, price. Price is so simple, 1 minus 0.9 into 2 lakh 80. It will be 28,000 favorable. Next, usage. Use 3 lakh. They are using only 2 lakh 80, which I am very much happy. Into 1 rupee. So 20,000 favorable. So this was a simple problem. You can take it as B category, but this one was very simple. Next, we will try question number 39. So this is very much important. In this we will be going through the concept of closing stock. So that you have to keep in mind. Please be aware of this. Now, shall start. Please mark it as important, and this should be done before exam. Definitely you have to try this question before exam. when you are going to exam, before previous day, please at least see this problem if you have not time. So you can write the steps here and see this. So they are asking us to prepare, find out the usage, price and cost, same online. They are not going below mix and yield because they will be here will be having only one product. That's the reason. Now see, please be careful. Quantity of material purchased, which means they are purchasing 3 lakh units at 9,000, which means actual price is 3. Done. Actual price is 3. How did I get? Please make a note of it. 9,000 divided by 3,000. See, this is purchased, not used. Please be careful about this point. They are telling only purchased. Next, they are telling standard quantity of material required for. I think this is not done. 1 unit is 25 units. So for making 1 unit, they are using 25 units of raw material. So 1 unit output, they are using 25 units input. So you have to be careful about this. Now the standard rate is 2, actual rate is 3. Definitely we will be having price variance. See here, they are telling that closing stock of material is 500. What do you mean by this? They have purchased 3,000, but closing stock is 500, which means they are using only 2,500. Actually, they have used only 2,500 units. Got my point now? This is the catch here. Please make a note of it. So, production, material issued to production would be, please note on this formula, opening stock of raw material plus purchases minus closing stock of raw materials. In this question, do we have opening? They are telling nil. I am purchasing 3,000 minus 500 of closing stock. So 2,500 will be issued to the production department. So this was the catch here. Please make note of all these things. So now I have got my actual unit. Now what is my standard? How much should I be used? So finished products is 80. For 1 unit 25. So what would be my standard? It would be 2,000. So we'll make in a separate chart now. Illustration number 39. So this question has 2 parts. One is actually they had purchased, so issued to production. Is that opening stock of raw material? I'll use RM plus purchases of RM minus closing stock of RM. So in this they have told opening stock is nil plus purchases of 3,000 minus 500 of closing stock. We will be getting 2,500 units. So this was the actual units work at 3 rupees. This was given in the question. Now standard, they are telling that 1 unit they are using 25 units, but I require for 80 units. 80 units of output. So how much? I'll just cross multiply 80 into 25, which is 2,000 units at 2. Now done. You can proceed with the problem. So I have given all the insight. This was the main agenda. Please now solve the problem now. I have given all the points here. Please try the problem. I'll be giving you 2 minutes. That's all. 2 to 3 minutes I'll be giving. Please try. I hope you have done. Please check your answer with this now. So this is the answer. Everything is adverse. So now we move on to the next question, which is the illustration number 40. So this is the question of mixed yield and everything. So full problem on, you can rate it as full problem on material. So in this we will be calculating everything of material, every variance. So shall we jump into the problem? Yes sir. Now Z Limited, they are telling Z Limited manufactures a standard product. The standard mix is 60-40. So they are telling that the mix should be 60-40 at 15 and at 10. They have not given the standard quantity. We have to find it. How do we find? We can come back from actual. Okay. Now see, this is the important point here. The wastage and the losses I told you at the beginning of the classes. So the normal loss is 20%. They are telling if I put 100, I will be getting only 80 rupees, 80% or 80 kgs due to the shortage of material Y. So they are not following the proportion. Actual results were material X 210 kg, material Y 190 kg. So they have used material 210 plus 190 is 400 kg. But the actual output is 330. What should have been the ideal output? It should be 400 minus 20% is 320. You should have got 320, but you are getting 330. So we are in a good situation. But what is the standard here? That is the catch. Who do we find the standard quantity? So if you see actual output is 330, if 100 is put, you will get 80. Can we rework it? Can we go back, reverse? We use the term reverse engineer in industry. You can do that, no? So 330. So if I am putting 100, I am getting 80. But I got 330. What would be my standard? So it's like this, 330 into 100 divided by 80. So you got my point here, no? If I am putting the 100, I am getting 80. But actually I have got 330. So from 330, I am coming to standard. So which is nothing but 330 into 100 by 80. 330 into 100 divided by 80. I am getting 412.5. So if you cross now also, if you can cross check here. So I am putting 412.5, but I am getting only 80% into 0.8. So I am getting 330 output. So you cannot take this because this is actual. I cannot even touch because it is already incurred. I can't change anything. Actual they are using for 400 kg and getting output of 330. But actually they should have used as per standard. I am giving them a standard that please use 412.5. But this is total. I will do it for X and Y. X is 60%. No? 412.5 into 0.6 or 60%. I am getting 247.5. So 412.5 into 0.4, I will get 165. So this is my proportion. This is my standard quantity. So now I can find cost, I can find price, I can find usage. After that we will come to mix. For finding mix and yield, we should have RSQ. That we will see next step. First, please calculate cost variances. You please find cost. You have the standard quantity, you have the standard price, you have the actual quantity, you have the actual price. Please find these three variances: cost, price and usage. After that we will jump into mix. So if you are understood, please try mix also. What is mix? Mix, we'll add up the total actual quantity, which is 400, then we'll divide it by actual proportion. I am sorry, the standard proportion. So 400 in the ratio of 60 and 40, you will get RSQ. Compare it with the actual quantity for mix. For yield, compare the RSQ with the standard quantity. That's all. The problem is done. So please try. So since I have completed almost 35 problems, leaving 2 in fixed overhead, I have left 2 problems there. Remaining 30 to 35 problems you have completed. That's the reason I am giving you the chance to start with your own. Anyhow, it will be completed in class only. There is no issues. You will be getting the answers. You'll be getting the steps also in the class only. So just I'll be giving the hints. So you have to try from your end. So we will try now. What is the material cost variance? Actually can't change standard. I have to calculate. What is my actual? 200 into 16, 190 into 10.5. The materials were X and Y, I guess. What is that? 210 into 16, 3360. 190 into 10.5, it is 1995. Standard is 247.5 and 165. It was calculated at the rate of 15 and 10. plus 37. Please add it up. 5362.5. Here 3360 plus 195. 5355. So this is the chart I am giving you. Please try. So here you can calculate individual level also, gross level also. 5362.5 minus 5355. I think what, 7.5? 7.5 is for x and y. If you want, you can calculate for x, y separately also. Cost x, y. 3712.50 minus 3360. Next we have 1650 minus 1995. So the answer is 7.5. So 3712.50 minus 3360. 352.5. 1650 minus 1995. 345. So 7.5 adverse will be the cost. Now price x and y. What is the price for 15 minus 16 into 210? 10 minus 10.5 into 190. All are given in the question. I am just solving. Minus 16 minus 1. So minus 210. I am sorry. 210 adverse. Here it will be 0.5 into 190. 190 into 0.5. 95 adverse. So total is 305 adverse. Next we have usage of x and y. Two 47.5, 165 minus 210 minus 190, 15 and 10. 247.5 minus 210, 37.5 into 15, 562.5. Favorable. So 165 minus 190, 75 into 10, 750 adverse. So 165 minus 190, it's 25 into 10, 250 hours, sorry, it should be 250. So favorable would be 562.5 favorable minus 250, it's 312.5 favorable. So 312.5 favorable minus 305 of adverse will get again 7.5. So by this we have completed this problem. Please copy this. So now illustration number 40 we have completed. Next we'll go to illustration number 41. Can I give it a whether can be given as homework? No, we'll do it here only. So yeah, the following data is obtained from the cost record of ABC Limited. So standard mix is that they are using 120 kg of X, Y, 80 kgs of Y, 200. They are getting a normal loss of 30%. It was expected loss that there will be a loss of 60 kg and the output would be 140. But in actual, the proportion is changed on 110 and 90. So 200, but they are getting a normal loss of only 25, 5% less, and they are getting output of 150 kg. So now they have asked cost, price, usage, mix and yield. So we have to calculate all the material variances. So again, material all variances. So you can do this also. You can mark it as A and solve this problem also before going to the exam. Shall we start? So what is our standard material cost? 120 into 25 plus 80 into 50. Please use M plus and tell me the answer now. You can just tell the answer. Actual, you have two materials X, Y. Standard, we have X and Y. So I have to calculate now. Since this is a recorded class, I have to do on my own. 120 into 25 is 3000. 80 into 250 is 2000. 120 into 25. I'm getting 3000. 80 into 50. I'm sorry, not 250. So 3 and 4, 7000. For X it is 7. So the 7000 is the cost, but the price, the total is 200. No, I'm sorry, 120. Just give me a second. You'll see this. So X and Y, we have two materials. X is 120 into 25. Oh my god, 120 kgs into 25. How much is it? 3000. 3000? 120. 3000. Next we have Y, 80 into 50. 80 into 50. 4000. So the total is 7000. Next Y, actual, 110 into 30, 90 into 45. 110 into 30, 3300. 90, 45. 90 into 45, 4050 plus 33. So standard cost, actual cost. Now if you want, you can calculate RSQ also here. And what is RSQ? RSQ is nothing but actual quantity in the standard proportion. What is my actual quantity here? 200 into 120 by 200, 200 into 80 by 200. Simple. 120, 80. Done. RSQ also done. So you have RSQ, you have all the standard quantities. Please try to calculate the variances. No? Please try for 2 minutes. So in this question, definitely you'll be getting some doubts in this. So that's the reason I told you to do. Please try, even if you are getting wrong, it's okay, then we'll sort it out. What is the difference? Why was the actual difference? Did we understand the question and all those things? So now in this particular question, have we considered the loss? Please be careful, because this is 200, this is 200, but here we got loss, so it will be 140. Here it was loss was only 50, so 150. This 140 cannot be compared with 150. No, actual output, this is what? So actual output is 150. Here the standard is for 140. 140 and 150 cannot be compared. No, that's the reason. That's the reason I told you. Please try. Now we'll try to solve it off. How we got? Now see, this 7000, we have 7350. This 7350 or 150. Like 150 output, we are incurring a cost of 7350. This 7000 is for 140, not for 200. 200 we have got a loss now of 30%. So this is for 140. So this 7000 is for 140. Actually we need it for 150, no? For having a comparison. See. So this 7000 is for 140. We have got a actual output of 150. Standard is for 140. So 150, 140 is not comparable. That's the reason I will be converting this standard from 140 to 150. So the formula would be 7000 into 150 by 140. So now the 7000 into 150 divided by 140. So I'll get 7500. So this is not comparable. This is comparable. So now this can I compare? 7500 with 7350. Yes. Now the variance is, what is the variance now? I'll write answer it here. The cost is standard minus actual. Standard is 7500, actual is 7350. So I will be getting 150 favorable. Now we have got the cost variance. Now we'll be calculating price and usage. So what is the formula for price? Standard price minus actual price into actual quantity. For usage it will be standard quantity minus actual quantity into standard price. So can we rate it here like this? Can I rate it like this? My job will be easy here. See how. See, if I find AQSP, I'll be solving these problems. APAQ is nothing but actual, no? Actually 7350. SPSQ is 7500 because now this standard has changed. Now I have to find AQ into SP. So what is AQSP? I'll find it here. AQSP is nothing but actual quantity. What are my actual quantities, sir? 110, 90. 110 and 90 into what are my standard price actually? What are my standard prices? 25 and 50. 19 into 50 4500. This 110 into 25, how much is it actually? 110 into 25, 2750. So I'll be adding 2750 plus 2500. I'll be getting 7250. So it can be done at material level also, or that's the, but doing this is easy. See, 7250, 7250 gone. So I am getting 100 adverse here, I am getting 250 favorable here. Done. The sum is completed now. Now I am left with mix and yield. So yield and mix will come here. So in exam write it in vertical form, not in this form. For this explanation, for you to understand, I am writing this. So what is the formula for mix? RSQ minus AQ into SP. So for this, SQ minus RSQ minus into SP. So I'll just elaborate. RSQ SP minus AQ SP. AQ SP I found it here, no? AQ SP, yes, it's 7250. Now SQ SP minus RSQ SP. So these are the different types of doing a particular problem. SQSP is nothing but standard, which is 7500. Now, what is RSQSP? RSQSP I have to find now. RSQSP 12080 into what is the standard price? How I found? It is here, see. RSQ 2550 into 25 into 50. This will be 4. 25 into 120 into 25, 3000, it is 7000. See, this problem is completed within few minutes. $500 favorable, I'll add 500 favorable minus 250 of adverse, I'll be getting 250 favorable. So please use this formula in this particular question, it will be easy. Just an expansion, that's it, no big thing here, just an expansion. So please copy this. So RSQ was easy in this, we found it out. So in this, the point to be noted is that we have normal loss. So the normal loss per standard, normal loss per actual is different. So I'll be converting the standard to actual, because actual cannot be changed. Actual I have an output of 150, but standard is for 140. That 140 I'll be converting it to 150. That's the core concept in this question. So then other than that, everything is same. RSQ I had 200 units. I did it in the ratio of 60 and 40. Shall we go to the next problem, which is the question number 42, or else take 2 more minutes. Please copy it down. So guys, I also suggest you to have an impact, sorry, give equal importance to both theory and practical, because theory, so practical anyhow you'll be rating, you'll be practicing problems. So if you're adding some theory to it, maybe one liner as I told, it will be like different from others. So this though everyone can do. This practical problem, when you do 2 to 3 times the same problems, anyhow you will be getting it. But the rating theory in the practical question is not that everyone will do. So if you guys do, you will be in a better situation than others. So you will be getting more marks. So now I'll give 1 more minute. So now completed with question number 41 also. Now we are going to question number 42. This is labor based. So till now we have completed all labor questions. I'm sorry, material questions we have covered everything. So we are done with 41, we are done with 40, 39, 38, 37, 36. So 36 was a big one. So 35 is based on ratios that we'll learn in a separate, learn as a separate topic, because it may be asked in exams. We'll be learning all the ratios, and 35 is a big one. It will be taken in a separate class. So one single session, one question. I'll clear it everything then and there itself. So now 42, labor. See, the standard and actual figures of M Limited are as under. Standard time for the job is 800. Standard rate is 60. So what is the standard cost here? 800 into 60. 48,000. Done. Actual wages paid is 5688 and actual rate is 64. What are the hours actually worked here? So I'll calculate. Total cost is 5688 divided by 64. I'll get number of hours. 5688 divided by 64. I got 792 hours. So I told them to work for 800, but they have worked for 792. I am okay. I told them to pay that they should be paid 60, but they are paying 64. So I think we'll have adverse variance in price and favorable variance in usage. Cost we have to calculate. Next the question is cost, labor cost variance, labor rate and labor efficiency. That will do. I hope the previous problem was clear. Now illustration number 43. 42 labor. We have to find the standard, we have to find the actual. I got 792 hours, paid at 64. How much was it? This I told 60 to be paid, 800, 48,000. 792 into 64, 5688. So now everything is on your screen. Please calculate cost variance, rate variance and efficiency variance. So this is a simple problem. So cost variance, SR into SH, I am writing formula, AR into AH, 60 into 8000, which is nothing but 48,000, minus 792 into 64, which is nothing but 50,688. So the answer of this 2688 adverse. Next we have price variance. Price is nothing but standard rate minus actual rate into actual hours. Standard rate is 60, actual rate is 64 into 792. 792 into 4. 792 into 4. 3168 is the adverse variance here. Next we have efficiency variance. How much hours I told actually to them? 800, but they computed in 792, but I will be paying them at the standard rate as per formula. So 480 favorable. 3168 minus 480, you will get 2688. The answer is matched here. So please copy this illustration number 42. It's done here. So this one was a very simple problem. Based on labor, we calculated everything here. So now illustration number 42 is also completed. Now we will try some illustrations on sales variances. So this will be done, this will be done. So now question number 45. So this is based on sales price variance, not the margin variance. So we have problems on those also, which we will be covering. So the budgeted sales and actual sales for the two products, they are given budgeted quantity, they are given actual quantity, they are given the price, they are given the value. We have to calculate all the sales variances. That's all. It's a simple problem. Illustration number 45. First we will calculate sales value variance. So it is nothing but standard sales minus the actual sales. How much is my standard sales? Oh, it's same. So then there will be no variance actually. In the value, so sales value there is no variance, but we'll get definitely in price and volume variance. So those two things we have to calculate now. So price is nothing but now we will be calculating volume and the price. Do we have a single product or two product? We have two, X and Y. 3443. If that will multiply by actual units, 800, 600. So 200 favorable or adverse? Please calculate. So how do we calculate? Please be careful here. I told them to sell at 3, they are selling at 4. Profit, I am in a profit position now. That's why 800 favorable. I told them to sell at 4, but they are selling at 3. I am at a loss, no? And also 200 favorable. Next we have volume. We have actuals here only, no? I have the standard price here only. Now I will see what are these two. 600, 800. So here also be careful. There I told that sell 600, but they are actually selling 800. I am in a position of 200 gain, no? 200 into 3, 600 favorable. Now I told them to sell 600, but they are selling only. I told them to sell at 800, but they are only sold 600 units. I am at a loss of 200 units, but I am losing 4, so 800 adverse. So again I will be 200 adverse. Here 200 adverse, here 200 favorable. I will be getting. So illustration number 45 is also done. Now what illustrations can we cover? We have to see. Please copy it down. So we'll now jump into the illustration, other illustration. See here we have based on margin, we'll be covering it shortly. Mix variance and all those things. 47 we have work in progress also, that also will be covering. 48. So we have some 3 to 4 theory illustrations. We'll be completing that now only. After that we'll be having some advanced illustrations. We'll be discussing in detail. That's the reason. So we'll be completing off first the easy ones. Not the easy ones actually. Not those which are tough actually. Now HLL company uses standard costing system and budgets the following sales and cost. So they have budgeted the units as 20,000 sales GP, beginning inventory. They don't have opening or closing stock. Opening and closing stock. The 2022 budgeted sales level quantity. So this is for 2022. The 2022 budget sales level quantity was a normal capacity used in calculating the fixed overhead predetermined rate. So this is the normal capacity. At the end of 2022, the company reported production and sales of only 19,200, which means it might be under recovered. Total factory overhead incurred was exactly equal to budgeted for the year, and there was under applied total factory overhead of 2000. Factory overhead is applied to work in progress inventory on the basis of the standard direct labor hours allowed for the units produced. Although there was a favorable labor efficiency variance, there was neither a labor rate variance nor the material variances for the year. Require an explanation of the under applied factory overhead of 200 being as specific as the data permitted in indicating the overhead variance affected. So we will see what is the answer given for this. So under applied factory overhead will arise when the actual factory overhead is incurred larger than the standard amount of the factory overhead applied to the work in progress. The standard amount of factory overhead applied to work in process is based on actual rather than the budgeted units. So what is under applied and over applied? See, under applied is that, so going to the example of the offline classes, so I invested 1 lakh and the capacity is 50,000. So in a particular year 45 students came. So 45 into 2, 90,000. I only recovered 90, but my actual was 1 lakh. So that 10,000 is called under recovered. If suppose 55 students came, then 100% recovered. For that 5 students I have to incur another 1 lakh, because the capacity is only 50, no? That's the reason. So if you are not actually recovering up to 50 in this particular example, 50 students, then there are chances of under recovery. So that's what they are telling here. Based on the information given, some of the factory overhead spending efficiency idle capacity variances resulted in unfavorable total factory variance of 200,000, which means they have not recovered 2000 on the total basis. The factory overhead efficiency variance must be favorable because it is computed on the same basis as the direct labor efficiency. So the efficiency is positive here, which was given favorable. So since direct labor was favorable, so even we are getting fixed overhead as also favorable. The company would have an unfavorable idle capacity because actual activity level for the year was less than the capacity. So we didn't use the capacity 100% in calculating the standard cost. Now, as to the factory overhead spending variance, the balance will be unfavorable because actual cost would have exceeded the budgeted cost. So actual cost is exceeding the budgeted cost. Since budgeted allowance for the production of 9,200 must have been less than 20,000 and the cost were exactly equal to the budgeted allowance. So here actual allowance is up to 20,000, but we produced only 19,200, we would have under recovered. The magnitude of spending variance is undetermined information given. So now that question is done. See, now what is the second question? A team of management consultant and company executives concluded that the standard cost installation was desirable vehicle for accomplishing the objectives of progressive management. State some of the uses of standard cost. See, they are asking the uses of standard cost. What are the uses of standard costing? So this we discussed in detail in the first session of standard cost. Anyhow, we will be seeing now also. So what is standard cost? Standard cost is scientifically predetermined cost of manufacturing a single unit or a number of units of a product during a specified period in the immediate future. A standard cost, as the word implies, consists of two parts: standard and a cost. Standard is carefully determined method of measurement of executing a task. So here they are telling the meaning. So in examinations, if they are asking for uses, advantage, disadvantage of a standard cost, please write 1 to 2 lines of the meaning of standard cost and then jump into the actual question. So in this they have asked what are the uses. So it helps the management to evaluate production performance. So production performance can be measured by measuring the actual performance with the standard performance. It helps in management in fixing standards. It will help in fixing the standards. Next, standard costing is useful in formulating production planning and price policy, which is nothing but budgeting and pricing. Next, we have measuring rod for determination of variance. So it is a measuring rod for determining the variances. Next, it facilitates eliminating inefficiencies by taking corrective measures. Once we got the variance, then we can take the corrective actions based on the variances. If it is price variance, we will ask the purchase department. If it is usage variance, we will ask the production department. If it is idle capacity, again we will ask the production department. Like that. It acts as an effective tool for cost control. So in this we can control the cost. It helps the management in taking important decisions. Then it facilitates the principle of management by exception. I told this is important, no? Mark it. Effective cost reporting system is possible. So by this we complete the uses of standard costing. Next, in a cost conference, the speaker discussing budgets and standard cost made the following statement: budgets and standards are not the same thing. Obviously, they have different purpose and they are set up and used in a different ways, yet a specific relationship exists between them. So it has a relationship, it has the differences also. Now they are asking the differences between budget and standard and the similarities. So difference between and the similarities we have to discuss now. So this they have told, and the 51 question. So now we will discuss these differences and similarities. So we have 2 points. First they will discuss the differences, then they will be discussing the similarities. So let's get started now. In the budgetary control, budgets are used as means of planning and control. It is used for planning and control. They have various segments. They will be setting the budget in advance and the actual performance is compared with the predetermined object. In this way, management can assess the performance of different departments. So in this, they will be assessing the performance. On the other hand, standard costing also sets standards and enables to determine the efficiency on the basis of standard and actual performance. It is the main agenda of standard costing. Budgetary control is essential to determine the standard cost, whereas the standard costing system is necessary for planning budgets. The standard costing system is necessary for planning budget, which is nothing but they are interdependent. In budgetary control, the budgets are prepared for a concern as a whole. This is important. Whereas the standard costing are set for producing a product or a service. In standard costing, unit concept is used, while in budgetary, total concept is used. So this is one point. This is one difference we can take. The budgets are fixed on the basis of past records and future expectations. So we will take the past records and we will be estimating for the future. Standard costs are fixed on basis of technical information. So standard cost is based on, we will be having some technical information. Next, standard costs are planned costs and these are expected in future. As far as the scope is concerned, the budgetary control is much wider than standard. So this is one more point. It is wider. So total and unit concept. That is one more difference. So budgets are prepared for income and expenditure and other functions of the department such as purchase, sales, finance, but standards are only prepared for expenditure only, and therefore in manufacturing department standards are set for different elements of cost, material, labor. But for income we also prepare for sales, sales variances. So that also you can add here. Further, in budgetary control, the targets of expenditure are set and these cannot be exceeded. So this is one more point. In budget, you cannot exceed the expenses as told in the budget, but in standard you can. Not expected, but you can exceed. In this system, the emphasis is on keeping expenditure within the budgeted. In standard costing, standards are set and an attempt is made to achieve these standards. The emphasis is on achieving these standards. Actual cost may be more than standard cost, and there can be no such thing in budgetary control. The budgetary control system can be applied partly or wholly, but budgets may be prepared for some department, maybe purchase department, maybe production department. It may not be prepared for all department. If a concern is interested in preparing production budget only, it is free to do so. So if you are only concerned about production, you can do that. Standard costing cannot be used partially. It will be have to used wholly. Standards will have to be set for all elements of cost. In fact, systems operate in two different fields and both are complementary. So which means they are interdependent. Next we will see the similarities. So what is the first similarity? It is an attempt to predetermine expenses. Next, why is it required? The budget and the standards are set by records of the current operational methods and procedures and have not just been set by hopes so called for good production. What is the second one? Second, both consider departmental expenses according to the accounts. So they will be taking the expenses from the accounts only. Generally speaking, all departments have their sub accounts. They have been budgeted for a certain amount to be spent for a specific users. If there are cost differences, they should be investigated. So they are talking about the investigation here. Next, the third is the responsibility. Third similarity is that both assume costs are controllable along the direct lines of supervision and responsibility. Supervisors are responsible to manage the cost not only for production but also for cost of production. Supervisors should be aware of the budget. Finally, both require issuance of periodic comparative cost reports. So we will be giving the cost reports when the costs are much higher or lower than the budgeted amount and are controlled by standards. So uncontrollable situations, it is not in our hand. So we have to be only concerned with the controllable situations. Then these differences should be broken down and should show management specific reasons for these differences at each interim reporting period. So budgets are similar to standard costs in their methods of approach and measurement. If standard costs are known, budgeted cost can be derived from them by their application. So these are the similarities and the differences between budgeting and the standard cost. So budgeting, we have a detailed chapter which we will be discussing next after the standard costing. Next we have illustration number 51. The use of standard cost in pricing and budgeting is valuable. The use of standard cost in pricing and budgeting is quite valuable since the decisions, the fields of pricing and budgetary planning are made before the cost and consideration discussed. So this is a simple question. To set the sales prices, executives need information furnished by the accounting department. Since standard cost represent the cost that should be attained in a well-managed plant operated at normal capacity, they are ideally suited for furnishing information which will enable the sales department to price products. Budgets are used for planning, coordinating future activities and for controlling current activity. When budget figures are based on the standard cost, the accuracy of the resulting budget is strongly influenced by the reliability of the standard cost. With standard available, production figures can be translated into manufacturing cost. So if you are having this standard cost, we can convert the number of units into monetary value. That's what they are telling here. So 51 is done now. 50 is also done. 49 is done. So now we are left with only few illustrations. We have 54. So 54 is an interesting one because it's reconciliation of profit, standard and the actual profit. It is interesting here. 54, 53 is also on the same lines. 53, 54 is same. Next 52 is also same. Variance analysis 52. 50 and all done. So this one is important. 47. 46 is based on sales margin. We will do that. 55 is done. 45 is done. 44 is based on fixed overhead. 43 is based on labor variances. It's easy, that will do. 42 is done. 41 is done. So 40 is done. I think we are left with around 10 to 15 illustrations, 2 in fixed overhead and about 8 to 10 in this comprehensive illustrations. After that, this chapter is done. So only we will be left with the MCQs and on those parts. So MCQs, true or false and fill in the blanks, I suggest you to do, because anyhow we will be having the answers and it will be direct questions. It will be based on the concept. The concept is well explained line to line. So that's the reason I expect you to do fill in the blanks, true or false and MCQs. The other question will be covered in class. So MCQs, if it is based on some important topics or if it is a comprehensive one, that I will cover. So I am planning to take those questions in a separate session. So the first important thing is to cover all the illustrations. The institute will ask from the illustration. After that, I will have a separate session on only questions of all the chapters. So if anybody wants to refer that, can refer. If it is not important, if someone thinks it is not important, they can only do illustrations. So those questions will be based on illustrations. That's the reason I will be covering it separately. So 35 is control ratios will be done. So 34 I will do, as I told, I will do in a separate session. Now we have interpretation. So this theory part is left now. I will do it now for today and we will wind up the session. So interpretation of variances and inferences done. What is it? So the purpose of standard cost accounting is to control cost and promote efficiency. That is what we were doing, actual and standard. This system is not another accounting method for accumulating manufacturing cost, but it is used in conjunction with such methods as job order process costing. Standard costing is based on predetermination of what it should cost to manufacture a product, and inventory accounts are debited by this cost, standard cost. So they are telling that it is used for determining the cost. This should be the cost, this should not exceed that. A comparison is then made between the standard cost and the actual cost that were incurred. Any deviation from the standards can be quickly detected and responsibility pinpointed so that company can take appropriate action to eliminate the inefficiencies. This is known as management by exception. So here also we have a point of management by exception, where both significant unfavorable and favorable differences from the standard are the focal point of the management attention. Next, a standard is a norm against which the actual performance is measured. Correct? No, it is the measuring rod against which the actual performance is measured. The objective of setting standard is to measure efficiency, whether the particular department is efficient in their work, and monitor the cost by assigning responsibility for deviation from the standards. Next, also a standard can motivate employees by providing them the goal for achievement. But a question that often arises is, what is the proper standard to use? A company can estimate material, labor and factory overhead usage and the cost, but what about the unforeseen costs such as spoilage, lost time, equipment breakdown? Should this item be considered in determining the standard cost? So this is the question. Next, should be answered. So because in standard costing we did material, we did labor, we did the overhead, we did the sales, but we didn't take into consideration the equipment breakdown, the spoilage and all. This is the point to be taken into consideration by the management. Some companies set their standards at maximum degree of efficiency. Using an ideal standard, they determine cost by considering the estimated material, labor, overhead cost, the condition of the factory and the machinery. So this is the ideal method of setting the standard. You have to take into consideration of all the things, and the time for rest period, holidays and vacations. Make no allowances for inefficient conditions such as lost time, wastage and spoilage. This ideal standard can be achieved only under the most efficient operating conditions. Therefore, it is practically unattainable, generally giving rise to unfavorable variances. So they are telling that ideal standard can be achieved with most efficient operating. If not, unattainable. If it is not attainable, then we will be having unfavorable variances. Companies using this type of standard feel that this provides a maximum objective for which to strive in the attempt to improve the efficiency. There is, however, a psychological disadvantage. Factory personnel may become discouraged and lose their incentive to meet the standards that are usually impossible to attain except under perfect. So they are telling that factory personnel will be discouraged, that these standards cannot be achieved if it is at the highest efficiency. Recognizing this potential problem, most companies set attainable standards that include such factors as lost time, normal wastage and spoilage. So all those factors they are taking into consideration nowadays. These companies realize that some inefficiency cannot be completely eliminated, so they design standards that can meet or even better in efficient production situations. The primary concern of the manufacturer should be set standards that are high enough to provide motivation, promote efficiency, yet not so high they are unattainable and thus bad for the workers' morale. So standard costing guides as a measuring rod to the management for determination of variances in order to evaluate the production performance. The term variance may be defined as the difference between the standard cost and the actual cost for each element of the cost incurred during the particular period. So the term variance analysis may be termed as, see, this is the meaning of variance. The process of analyzing the variance by subdividing the total variance in such a way that management can assign responsibilities for the off-standard performance. So they are telling that variance is detailedly examined for fixing the responsibility. Next, the variance may be favorable variance or unfavorable. So what is favorable? Actual performance better than the standard, it represents favorable. Similarly, actual performance below the standard, it is called unfavorable variance. Once the variance have been calculated, those who manage the business have to decide which variance should be investigated. So it depends that they were telling error ratio or the tolerable ratio, that comes into picture. Should every advance be investigated? Should every variance should be investigated? Such investigation takes time and so itself involves further costs in searching for the cause. Is it worth incurring the further cost to find out what happened to the cost under investigation? Such an investigation might unearth some unwelcome facts about the world behind the accounting. It is fairly obvious that reasonable answer lies between the two extreme of investigating everything and investigating nothing. So we have to make a decision that investigating everything, in between investigating everything and investigating nothing, it should be something between that. You have to set a standard that if this much is the problem, I will be investigating, not all the things, because for investigating also you will be incurring cost. Already you have suffered loss and cost, and over and above that, if you are investigating, that also will be having a loss, no? If it is not feasible, if it is not actually required. Such persons would run their office down the variance report item by item using their knowledge and experience to identify the variances for further investigation. That approach is called initiation. So please make a point of this. It may be asked in MCQs. Please be careful. Please be careful about this point. And is fine for the experienced manager, but risky when applied by a trainee and someone who is not familiar with the operational factors behind the variances. If the accounting information is being processed by the computer, it is often convenient to let the computer do the work of highlighting the variances for investigation. So some systematic approach is needed. So that depending on the computer to find out the level of variance that should be investigated. This may be achieved by setting a filter rule which filters out the unimportant but draws attention to the matters regarded as significant. This might be investigate all variances which are more than 10% of the total standard cost. It might be investigate all variances which are more than 10,000 in amount each month. So these are some of the filters that can be used to investigate variance. So this is the benchmark. Above that it will be investigated, below that it will not be investigated. Establishing filters is a matter of experience and judgment in order to ensure that no significant difference by amount is overlooked. using filters may not always be a perfect approach. The choice of what is important may vary depend upon the nature of variance. So nature of variance also, depending upon the nature of variance, we will be making the choice whether to use filters, whether to use 100%, should we use 100% of the variances should be investigated, and all those things. Using the filters does not take into account the cost and benefit of the variance investigation. It does not incorporate the past history of performance in that item where inefficiencies are persisting through lack of remedial action. The item may be one where variance has suddenly worsened dramatically but still falls within the filter limits. For example, when a cost has habitually shown a variance within 3% of the standard cost but suddenly increases to 12%, that could be highly significant. They are telling that it might be less than 10% of the standard, suddenly it may jump to 12%. That should also be investigated. The selection of variances for investigation is therefore very much dependent upon the circumstances and not on the person making the selection. So investigation depends on the various circumstances and not the person who is doing that. So by this we complete the theory portion of this. I think the important part is this one, initiation. It might be asked in MCQs. So yes, today we have completed almost all the comprehensive illustration, then the fixed overhead variance. Remaining 2 illustrations that will be covered in the next class. So 2 illustrations left there. So 34 we have to do. So total 3, 36 is done. So 43, 44, 46, 47, 48 is done, 49 is done, 50 is done, 51 is done, 52, 53 and 54. So we are left with only 10 illustrations. After that, this chapter of standard costing will be completed. So I'll end this session now. So I'll be doing a separate session on question number 34 because it is very much important, because it has all the concepts, and later we'll be doing the remaining problem. So thank you guys. So I'll be ending the session here.